Hello, and welcome to the Security Economics Podcast. This is your host, Peter Harrell. I have to say, it feels like every week in the Trump administration is tariff week, but this last week has definitely been tariff week, with President Trump introducing the concept of reciprocal tariffs, steel and aluminum tariffs, and lots else for us to talk about. I'm pleased to be joined this week by C.J. Mahoney, who served as Deputy U.S. Trade Representative during President Trump's first term and is now Deputy General Counsel at Microsoft. CJ is here speaking with us in his personal capacity, not on behalf of Microsoft, but really looking forward to hearing his insights, not just on trade, deals, and tariffs, but also on issues like AI, technology competition with China, many of the other issues that are going to be interesting us here at Security Economics in the months to come. CJ Mahoney, welcome to the Security Economics Podcast.
Well, thanks so much, Peter. Great to be here.
Oh, it's great to have you on. I think in light of the last couple of weeks, I'd really like to start the discussion with you around trade policy. You know, during the president's campaign, he obviously promised an aggressive trade policy, and I think it's fair to say he's been delivering on that over the last 3 or 4 weeks. He certainly kept all of us commenting on it in a great deal of detail. You had the day-long North American trade war that then got put on pause for about a month as he negotiates with the Canadians and the Mexicans. We obviously now have in place, as of last week, an additional 10% tariffs on U.S. imports from China. And then this week, we saw the president announce that he'd be setting up reciprocal tariffs on our trading partners, where the U.S. will be tariffing our trade partners at a rate at which they tariff our goods, plus potentially some calculation of the non-tariff barriers that those countries impose on our goods. Then, of course, the president's also been talking about still more tariffs in the coming weeks on products like computer chips and pharmaceuticals, as well as on other trade partners like the European Union. I really appreciate the chance to talk to you today, CJ, because of your very extensive experience, but also in particular having served as Deputy U.S. Trade Representative during the president's first term. You've obviously been in the room and seen a lot of how the president, how his team thinks about trade policy. And so let me just kick this off by asking you, what lessons do you think we should be drawing from the first couple of weeks of Trump's second-term trade policy?
It's still early, and we don't have all of the key personnel in place. The two key trade people in the administration are going to be Jamieson Greer and Howard Lutnick, who are not there yet. The original plan was to have these studies that would conclude on April 1st, and then there would be a policy process and an announcement of moves after that. It seems that they're on a little bit more aggressive timeline. I would say, though, that I think that the key lessons that I draw is that there is going to be a different approach than there was in the first Trump administration. I mean, if you go back to the first Trump administration, there were no tariffs in the first year of the administration. The first year of the administration was really focused on the rest of the economic plan, on the deregulatory agenda, and on tax cuts. The trade moves that were initiated in the first year were starting the renegotiation of NAFTA and the 301 study. But those were indications of what was going to come, but there weren't actually solid actions. Then in 2018, you had the steel and aluminum tariffs, and then ultimately the 301 tariffs. But again, that was a year had gone by before those measures were rolled out. So the sequencing this time is different. Rather than do the tax cuts first and then do the tariffs, it seems to be the other way around. Now, the tariffs that have been imposed so far have not been that meaningful in the sense that the incremental 10% on China, given the tariffs that already exist on China, I don't think is going to be that significant from a macroeconomic perspective. The steel and aluminum tariffs, we have steel and aluminum tariffs now. This is basically getting rid of some of the exclusions. So it might be that big moves are sequenced more with the rest of the economic agenda, but at least so far it's not clear that the same sequencing is going to follow. I also think that there's a difference in approach in that in the first administration, we rolled things out in kind of a staged way. If you're looking, for example, at the China tariffs, we ultimately ended up with tariffs on over half of China's imports into the United States, but didn't start out that way. It started out with about $50 or $60 billion worth of tariffs, and then it inched up after that. There was also an exclusions process, which was designed to mitigate some of the pain. It seems that some of that complexity and nuance is not going to be the approach this time around, at least not in the first iteration. And we'll see what happens. As I look back on the first administration, I think some of those things were really helpful in making the policy more sustainable. The reality is that I think every president has a disruption budget when it comes to trade, in terms of political capital and economic costs. And President Trump proved the first time around that budget is a lot bigger than other presidents perhaps thought that it was. But I still think that there is a limited budget. And the question is, how do you deploy it effectively? And we'll see. I think they're using a different approach this time around, and we'll see how it goes.
That is also one of the president's favorite phrases.
Exactly.
Let's see what happens.
Let's see what happens. That's always right.
Let's see what happens is what he likes to go out and say there. And I very much take your point, CJ. It does look to me from the outside that things have just been moving quite a bit faster than they were in the first term. I mean, I do remember, obviously in the first term, as you say, we had studies that began by late sort of 2017, but it was really 2018 that tariffs came in, and we saw them come in and phased, kind of a phased approach. And we're seeing things move faster. But it also looks to me like the goals of this set of tariffs are potentially more expansive. If I look back at what you did what you and your colleagues and the president did during the president's first term, he had a clear objective of increasing tariffs on China to try to get a deal and barring a deal to try to create incentives to de-risk America's dependence on China and the Chinese Communist Party. He clearly wanted to protect a couple of individual industries, steel and aluminum, and we saw a couple of other particular products, appliances and things he brought in tariffs on. But it looks to me like he has a more expansive set of ambitions that he's trying to achieve this year. He talks about tariffs as revenue. He also talks about tariffs as rebuilding manufacturing. And then finally, as we saw with the threat of tariffs on Canada and Mexico, he seems to see tariffs as kind of a negotiating leverage for both economic and non-economic kinds of policy objectives. And I'm curious how you think he is thinking about the goals this time around, and also how you kind of reconcile goals which may have some tensions between them. I mean, if you want to tariff the world to raise revenue, it's hard to negotiate over that.
I think you're right. I think that the focus is different this time around. I really saw the first administration's trade policy as really, at the end of the day, pretty much exclusively focused on China. You had the Section 301 tariffs, which were really kind of the centerpiece of it. I would even say that USMCA, in large part, was focused on China in the sense that the biggest change were the rules of origin, tightening them so that less non-regional content got into cars that would receive duty-free treatment under the agreement. That was really something that was aimed at China. Even the steel and aluminum tariffs, at the end of the day, were really based on an overcapacity issue in China and the effect that had on the global markets. I think now the focus is different. It is broader. It's on different countries, and the China focus, seems to be. We'll see where it goes. There seems to be some interest in reinitiating talks with China on a deal. But at the same time, the focus on the trade deficits with Europe and with Mexico and other countries, I think you're right. I think it is a much more expansive agenda. And in terms of how the president talks about tariffs too, it is different. It's not just about bring manufacturing jobs back or even leverage for negotiations. He also talked about tariffs as a source of revenue for the federal government. And so we'll see how it all comes together. And you can use tariffs for all of those things. The problem is that if you use tariffs to drive revenue and you want to optimize for that, you're not going to optimize for bringing manufacturing back to the United States or on building up more leverage in order to negotiate better deals with trade partners. If what you want to do is to bring in the maximum amount of tariff revenue, what you really want to do is set the tariff rate to a point that's just below what would affect trade, so that you can still have a lot of imports coming into the United States and you can maximize your tariff revenue. If what you want to do is to protect manufacturing, what you want is a trade prohibitive tariff. So you want the tariff to cause import substitution, which means that you'll have fewer imports coming in and you'll have less tariff revenue. If what you want to do is negotiate, and use the threat of tariffs or the imposition of tariffs to negotiate. The end result of that is that the other side does what you want to do, and then you get rid of the tariffs. So you're not going to have the tariff revenue, and you ultimately wouldn't have the protective barrier for U.S. manufacturing. Now, I mean, there are different combinations, and perhaps you can come up with one that makes progress on all three fronts. But there are some policy trade-offs that ultimately they're going to have to make.
I think that's actually a really interesting point, CJ, that you make between if you actually wanted revenue, you wouldn't necessarily want to have tariffs at a rate that would rebuild manufacturing. You'd want a tariff that is kind of just high enough that people wouldn't onshore, but they'd simply pay the 15% or whatever that number is. I think that's a really interesting point. It does sort of seem to me, though, that while he talks about revenue, and he clearly does envision getting some more revenue out of tariffs, rebuilding manufacturing has to be one of the major goals for him. I mean, he's talked about this for a very long time. He certainly seems to praise and talk up American manufacturing quite a bit. And he's been urging, foreign companies, the way you can avoid these tariffs is by, hiring American workers and building this stuff, building this stuff here. But it also seems to me that if I just look at some of the announcements over the last couple of weeks, and particularly, for example, the threat of 25% tariffs on Canada and Mexico, where we have a very integrated supply chain, that the uncertainty we are seeing can actually make it hard for companies to plan to build things in the United States because you don't know where your components are coming from. You don't know what your cost structure is going to be. If Trump really wanted to rebuild manufacturing here, if that was the front and center goal, how do you think he and the team should be thinking about that?
I think you're right that at the end of the day, companies do need predictability. And I think there's a lot that the private sector, one of the lessons that I took away from my time in government is that I think the federal government has a lot of leverage over the private sector, and the private sector just needs to know what the rules are and what the expectations are. So I think that there is, and I think that trade policy, if you want to bring manufacturing back to the United States, there has to be a trade policy component to it. So I think that it's reasonable for the president to look at this area, and I applaud him for drawing focus on it. I mean, until the 2016 election, we were not talking as much about the need for manufacturing to come back to the United States as we are now. Now, especially after the pandemic, where we saw how fragile global supply chains had become. And I think also just if we want an economy where people are doing things other than coding and innovating in financial services, we need some manufacturing. So I think that Trump has really moved conventional wisdom on this, and I think it's frankly one of his greatest achievements. I do agree with you, though, that ultimately, if you want to move manufacturing back to the United States, you're talking about long-term capital investments. And so the tariffs that are based on executive orders that could change from day to day, that could change if what we're trying to do is strike a deal, that doesn't provide that kind of predictability that would enable people to make those long-term investments. If you think that, well, this is really just about leverage, and once there's a deal, the tariffs are going to go away, you would look like a real chump if you made some investment based on the imposition or the threat of tariffs. There are also some places where, and I think chips are a good example, where I'm not sure that you could set tariffs at any level that would be effective in bringing manufacturing back to the United States if what you're trying to do is just tariffs alone, because the amount of capital expenditure that is needed in order to build these fabs is just so enormous that some amount of industrial policy, I think, is probably also necessary. And then there's also the other parts of the economic agenda, the tax situation, the regulatory environment. All of that matters as well. I think tariffs, it's reasonable to say that tariffs should be a piece of that. But ultimately, I think you have to have other parts of the economic strategy in place in order to achieve the objective that he wants to achieve. I still think there's time to do that. This is still very early in the administration. As I said, a lot of the appointees aren't even in place. But I agree with you. Ultimately, what you need is a predictable plan that companies can react to, change their investment patterns. And I think it's actually, if you look at where investment has gone over the last two administrations, I actually think that the trend lines are in a pretty positive direction. We're seeing big spike in factory construction in the United States. I mean, if anything, I think we're capacity constrained because of the workforce, the power, availability of suitable sites to build plants. And then you've also got to think about, does the United States want to go this alone, or does it make more sense for us to do this in combination with allies and partners? And I am on the side that would say that at the very least, I think we need to leverage USMCA and our partnership with Canada and Mexico. I just think that there's going to be some cost to reshoring. There's a reason why the manufacturing left. The manufacturing left because it was more efficient. If you're going to bring it back, you're going to pay a price. And I think in a lot of instances it can be a sustainable price, but one way that you manage that is by not bearing it all yourself. And I think spreading it out to Canada and Mexico is an easy choice to make. I would also like to see us do more of that with close allies like Europe and Japan. But again, that's another policy choice that the administration is going to have to make.
Let me actually dig in on that. You were one of the key negotiators for the USMCA agreement, which I think, those of us in the kind of trade policy space look at as one of the most successful trade deals, certainly the last decade or two. And you also said, CJ, you made this point about, Trump having really been able to shift the agenda and get us to focus on manufacturing. When I look at him and the threats of tariffs, I do see some potential there. I served in the Biden administration. Mm-hmm. I kind of don't envy the portfolio that Catherine Tai was given to try to go out and negotiate without really being able to threaten more tariffs or being able to offer market access, right? Yeah. She was sort of told to go out and negotiate, on behalf of workers, but without really having much in her portfolio she could threaten or offer. And it seems to me Trump is radically upended that. He's empowering himself and his negotiators to go out and, at least on the threat side, make very credible, very serious threats. And so I could see some potential after, 4 years of not a lot of trade deal making. I could see some potential if he wants deal making that you could really get quite a number of deals. And, he's talking about that with Prime Minister Modi and others. I want to come back to USMCA in a little bit more detail in just a moment before we move on to other topics. So, if you were thinking about this, if you were back in thinking about this from a deal-making perspective, where would you see opportunity for deals over the next year or two?
I think there's enormous opportunity for deals. And part of me is a little jealous that I'm not a trade negotiator in this environment as opposed to when I was, because we had a fair amount of leverage last time around. But I think that the world has changed in ways that are only advantageous for the U.S. Trade negotiating agenda now. I mean, let's just go around, starting with Europe. In 2016, I think the Europeans felt that perhaps Trump's election was just a fluke, and if they could 4 years, then everything would go back to normal. I don't think they think the same way now. You also had a cast of characters among the leadership of Europe that I think just didn't sync with Trump as well as the evolving cast does now, with Mahoney in Italy, probably a new leader in Germany soon if the election goes as expected. The European economy also at this point is very clear. If you just compare how the Europeans have done economically over the last 8 years versus the United States, it's clear that Europe has lagged behind. The Draghi report was a devastating indictment of European economic performance and policy. Also, if you look at where a lot of the trade irritants between the United States and Europe lie, it's in the regulatory space. The Europeans have now come to the conclusion that their regulatory system is too onerous. You also had in 2016, countries like Germany still had a trade surplus with China. That's now been reversed. At the time, I think that a lot of people in Europe thought that to the extent there were trade tensions with the United States, Europe could hedge that by aligning more with China and seeing Chinese markets as an alternative to the American market. I don't think anybody thinks that today. And if Europe is going to really take on the challenge that was laid out in the Draghi report and become more competitive, they need a market, they need technology, and they need capital. Where are they going to get that from? Really, the only option for them now is the United States. So I think that the stars align for a deal with Europe, and I think it would be a different deal. It's not going to be the TTIP deal. I think it would probably focus more on technology interoperability and regulatory standards than some of the traditional issues like agriculture. But I think that there's an enormous opportunity there to be seized if the administration wants it and if it plays its cards right. India is another example. India is the relationship between the U.S. and India has just grown stronger and stronger. It was really frustrating to us at USTR that we couldn't get a little deal done with India. And India is still is a notoriously difficult partner in trade negotiations. But
very fair, yes.
Already we've seen one of the biggest irritants which was the tariff on motorcycles is something that they seem willing to want to trade away now. If you look at Canada and Mexico, as much as I like USMCA, I also, as somebody who was very close to it, know all the flaws in it. And I think that the Overton window has shifted in a way that if we go back and renegotiate, as we have the opportunity to do in 2026 and maybe even sooner, I think there's a lot more that could be done to integrate the economies of the United States, Canada, and Mexico in a way that would ultimately be beneficial for all three countries, but especially for the United States. Back in 2017, 2018, I think that countries like Mexico and Canada still held out some hope that they could be free agents in the rules-based global trading system. And that ultimately the WTO would be there to protect them from getting on the wrong side of major powers. That now doesn't seem likely. So if you are Canada or if you're Mexico, I think that your smartest strategy is to ally with a stronger partner. We are the natural partner with whom they would ally. So I just think that there are possibilities. For example, I think one of the things that the parties should really consider doing is how to align their external trade policies, meaning how can we have more common external tariffs that are consistent across North America. I mean, that was a subject that we didn't even really broach the last time around. I think that is the parties have already kind of headed in that direction a little bit anyway with some of the tariffs that Canada and Mexico recently have imposed on Chinese EVs. So I think that concept could be expanded upon. If you did that, you could even, in theory, you could simplify some of the rules of origin and make trade a lot more frictionless between the three countries. Ultimately, I don't think we could probably go as far as a customs union, because that would require countries to give up probably more of their sovereignty than they would be comfortable giving up. But I think you could maybe get a lot closer to that than the current free trade agreement situation. So again, I just think that there are enormous opportunities there for negotiations if that's what the administration wants to do. But again, if you got to decide what the goal is. Is the goal to strike deals? Is the goal to raise revenue? And I also think that there's an opportunity to expand the scope of these deals, well beyond where traditional trade agreements would go. I think we can talk about common industrial policy. I think we can talk about defense. And you and I recently wrote an article together for Carnegie where we talked about how three countries could work together on critical minerals and even on electricity infrastructure and things like that. So again, enormous possibilities if the administration plays its cards right.
So let me actually ask you to pick up on one of those themes, CJ. You noted, we'd work together on industrial policy. You also said in there, we could maybe work together on defense. And one of the things that has been striking to me watching Trump trade policy, a little bit during the first term, but particularly now, and I think you were beginning to see some of this under the Biden administration, is we're seeing more and more of a merger of sort of trade policy and national security policy, right? So you saw on the kind of trade policy front, if you will, one of the reasons Trump has threatened tariffs on Canada and Mexico has been fentanyl and migration issues, which is sort of a security issue. He obviously, as he's talked about trade policy, been calling on Europe to spend more on defense, which would also help ameliorate some of the trade imbalances if they were buying U.S. defense equipment. But even under the Biden administration, the Biden administration at the very end of its term had this global AI semiconductor rule they rolled out, which was national security focused. Let's keep China from getting access to chips in third countries. But I think there was also an undertone there of, we really want a lot of this construction, a lot of the data center build out to happen here in the United States, kind of a proto-America first semiconductor data center build out. So, we're just seeing on a bipartisan basis this kind of merger of trade and national security, as I look at it from an analytic perspective. Curious if you think that is inevitable, good thing, bad thing. Should we try to distinguish these lanes a little bit more, or should we be looking to kind of integrate our trade and national security policy more directly?
Well, if you think about this just in historical terms and go back to the rise of the global trading system and in the 1940s and afterwards, at the time, trade and national security were separate because the economies of the United States and the Soviet Union were separate. The Soviet Union had a closed economy. They traded with their satellite countries, but there really wasn't a lot of East-West trade, not any trade that was economically significant. So you could have the global trading system develop in a way that was completely separate from national security policy. You had things like the essential security exception, but nobody really invoked it, and so it was there, but it didn't compromise the functioning of the system. Then you had the fall of the Berlin Wall and a brief period of time when we thought we could just continue the same kind of security agnostic trading system at a time when at least the security threats that the world had didn't seem to be threats that were posed by great powers. It was posed by rogue states and terrorist groups and those kinds of things, who were not players in the international trading system. I mean, what we've now seen, though, is with the return of great power competition, the war in Ukraine, tensions between the United States and China, you have major economies that are run by countries whose security interests don't necessarily coincide. And so I think that there was going to be an inevitable breakdown in that system. And if you just go by the rules of the WTO, if we were following them faithfully, we would have to treat Russia the same way that we treat the UK. And that's just
crazy. It's just crazy. That's not the world we're in.
So long as that is I think that's the fundamental weakness of the WTO today. And I think it's, to some extent, it's really incurable. So I do think that this is inevitable. The question, though, is what is the United States? How does the United States want to react to it? Do we want to react to it by turning completely inward and keeping all of our options open, showing no quarter to anybody, or do we want to try to ally with countries whose security interests overlap with our own and have a set of economic rules that apply to those countries? It would be a more favorable set of rules. It would be, and it doesn't necessarily mean that you're never going to have any tariffs or that you're going to tolerate trade deficits of any size. But I could see a kind of a new plurilateral trading system develop between the United States and its allies, and kind of broadly construed. I have suggested, and this was again something that you and I talked about in the article, is that you would use USMCA as the nucleus of that, and I think you could easily add the UK and Australia to that. That group could then maybe talk to Europe and Japan, maybe ultimately even India. I think you'd have to have rules that dealt, though, with reflecting this merger of security and economic policy. I think you'd have to have rules that dealt with export controls and investment restrictions, and it would have to be kind of the whole suite of issues. In some ways, though, if you did that, there might actually be more. It would be challenging, but I think that there could also be some more possibility. I mean, one of the problems that we have had in trade negotiations is that the U.S. really has not had a lot of leverage in trade negotiations, at least not leverage that is proportionate to our economic power and the value of our markets, precisely because we've lowered tariffs so much. I mean, one way that you can correct that is by increasing tariffs, but maybe that should be done in certain areas, but there are costs to that. But if you widen the agenda and talk about defense cooperation, access to technology, I think that there might be some opportunities there that would allow for some interesting and creative deals.
It's very old-fashioned negotiating theory of putting some new issues on the table if you want to broaden the deal.
So you can sort of make it. Sometimes the problems can be easier to solve if you make them bigger.
Yeah, no, that's true. That's true. We do read about that in negotiating theory. Well, look, I know we could talk about trade probably every week for hours for the next year at least, but I'd like to shift topics a little bit because there's obviously a lot more going on in the world. And I particularly want to shift to ask you a bit about artificial intelligence, something I know you have thought about and been working on. Obviously, you're here speaking in your personal capacity, but you've been working on this issue over the last couple of years. And I think artificial intelligence is, just fascinating for all of us, both because we're beginning to use these tools in our own work and our own lives, and also because it's so important to our kind of geopolitical position and America's competition with China. And I think we can all sort of agree, you look at the investments that have been happening, the build out that's been happening, there might be some disagreement on is the big change going to happen in 2 years or in 5 years. This is clearly a transformative technology over the next couple of years. But when I look at the policy side of AI over the last couple of years, I think that I see a fairly substantial shift, at least in tone, between the Biden administration and the Trump administration. The Biden administration wanted to see AI development, but also put a huge emphasis on AI safety. They had an executive order on it, whole AI Safety Institute, and this kind of thing. I think what we saw Vice President Vance lay out just this week at the AI summit in Paris is a more kind of development first framing for AI, and focus on making sure that we develop AI as quickly as possible, because getting it out there will help us capture the economic and national security and frankly in our personal lives benefits from it. I'm curious for you. You've seen both sides of that. You've been a policymaker. You've been in business world. You've seen both sides of this. How do you think about the balance of speed versus safety in AI?
Well, I guess I kind of start from the proposition that you have to think about this internationally, and I think until now, kind of what you've had is one pole, which I would say is represented by China but also other countries in Asia, where they have been very development focused. Their focus has not been on safety. Their focus has been on the possibilities of AI. And then you've had
fair point. In Beijing, it's been let's run fast. That's a fair point.
And then on the other side, you've had Europe, which has all been about the risks and the dangers and how do we regulate. Europe's obviously first out of the gate with a big comprehensive AI regulation. The U.S. has been somewhere in the middle there, and with the Biden administration, I would say that we were maybe a little, this is at least a couple ticks to the right, closer to Europe than we were to the Asian perspective. I actually liked the AI optimism that was infused throughout the vice president's speech. A lot of the focus in D.C. has been on the downsides and has been on the risks. The focus in the private sector, and I think both for the markets as well as in the tech sector itself, has been on the possibility. I've been on the possibilities. I like the fact that the Trump administration is focusing on the upside of AI, because I think there's enormous upside for the country. What we really need in this country is growth in productivity. Productivity growth will solve a lot of our problems. That's how we can raise wages. It's how we can, I think, get more social cohesion and stability. It's how we can ultimately deal with our fiscal problems. Productivity growth has been pretty tepid, I think, throughout the West in recent decades. And so if we can turn that around, I think that's just unmitigated goodness. AI is of things that are on the horizon. I think AI gives us the best chance of doing that. So I really like the fact that the Trump administration is leaning into that. I'd like to see more of an AI first agenda in the federal government, and we'll see what happens with ultimately what the result of DOGE and these other efforts are. But I would think if you think about where AI, at least right now, is most likely to be the most productivity enhancing, it's in situations where there are a lot of rote, repetitive tasks. That describes a lot of the processing and the form processing and those sorts of things that a lot of the federal government deals with. So I got to think that there are enormous opportunities there. We clearly got to figure out a way to integrate AI more into our defense technology. So I think that this shift, there's positive developments that could come along with it. The one bit of caution, though, that I would have is that we don't want AI regulation to go the same direction as privacy regulation went, where the U.S. is at the federal level has been out of the game. And the result of that has not been for the technology companies, has not been that we've been in a libertarian nirvana. It's that we've had to follow the rules that are set by Brussels and Sacramento. And so ultimately, if Washington doesn't have a perspective on this and some rules of the road, I fear that the same pattern could play out. Again, that's one of the reasons why I am excited about the possibility of some meaningful trade negotiations between the United States and Europe, because that might be a way that the United States could influence the baseline internationally. Because ultimately, if America's going to succeed in AI, it's because American AI is diffused to the rest of the world. This is not a technology that we can just keep to ourselves, and we will not be able to monetize it to the extent that we need to in order to keep the U.S. economy at the forefront of technological innovation if we can't send this technology overseas. In the same way that I think we don't want AI regulation to go the same way as privacy regulation went. We don't want the development of AI to go the same way that the development of telecom technology went, where the U.S. invented it, but then ultimately the Chinese were the ones who spread it all around the world. So I think we want U.S. data centers, we want U.S. AI in as many places in the world as possible. There are going to be some countries where, for national security reasons, we're going to say that the technology shouldn't go. But I really think we need to, first of all, we need to share it as freely as possible with our allies. But I think that the swing states, on balance, we've got to err on the side of getting U.S. technology, U.S. data centers there. And the good thing for the U.S. government is that this technology, in order to deliver it, it's got to be delivered through the cloud. And U.S. companies dominate in the cloud. The U.S. government has jurisdiction and a lot of leverage over U.S. cloud companies, whether they're operating in the United States or in the UAE or in North Africa or wherever. So I think that there actually is a way that you can diffuse the technology responsibly and in a way that is consistent with national security. But ultimately, I think that's got to be the goal, to get it out and in as many places as possible.
Yeah, CJ, I think that's a really interesting and really powerful point. Both, I'm with you. I like the optimism that we are hearing in the last couple of weeks around AI. I mean, I use AI, not the high-end AI, but I use AI regularly now in my work. I mean, including PowerPoint. My PowerPoint slides now design themselves, which is great. It means my PowerPoint slides.
That is, I think, one of the most, that is, at least for people who are lawyers or in our kind of line of work, that is the killer app that I've.
Oh, it's been the killer app that I can just like click the designer feature and, my slide designs itself.
Yeah, you can have that's what I do. In order to make PowerPoint presentations, I write a prompt that says write a slide presentation, and it's amazing. It's absolutely.
No, it's amazing. So, day to day, making my life better, hands down. And I'm very optimistic on, where it's going to go as it continues to develop capabilities, whether it's, deeper research capabilities, whether it is agentic capabilities to help kind of actually plan travel and that kind of thing. I'm very optimistic about it. But then I also very much appreciate your point. When I think about American national power, one of the ways in which we have had American national power for many years, it's not just been our kind of brute economic strength, and I do think AI will increase our sort of raw economic power, but it's also that we've sort of suffused our operating system around the world. Our financial system got diffused around the world. Our industrial companies got suffused around the world. And that's been terrific for the countries where they've invested. It's created jobs overseas. It's built infrastructure overseas. But it also becomes a major source of American power and leverage over time. And I very much agree with you that if we want to have kind of our pillars of national power, drawing countries our way, deepening relationships, and ultimately, probably at the end of the day, also have some leverage, it is going to be very valuable for us to get our AI operating system suffused around the world. The flip side of this is I think we see the Chinese doing the same thing. Obviously, we've had DeepSeek and the kind of breakthroughs in DeepSeek. And it's interesting to me when I look at DeepSeek as an open model, sort of open model. I do think the Chinese very much want to push DeepSeek out around the world as kind of an AI operating system that folks in the world can build on. And I think we're going to see kind of AI competition over the next year or two. But I'd like to ask you about DeepSeek. I've played with DeepSeek. It strikes me as not quite as capable as our more advanced AI, but it is clearly a capable model. I'm curious what lessons you draw from what we've seen out of DeepSeek and Chinese development.
So I would mention a couple. I think one is that the age-old maxim that necessity drives innovation still is very much true. Part of what DeepSeek achieved was made possible because of the incentive structure that they had. The Chinese really needed to figure out a way to train models with less GPU capacity. But ultimately, I think that the world was going to go in that direction anyway because the GPUs are so expensive. They suck up a lot of power. But I think it's a cautionary tale as we think about the limits of U.S. export control policy. And I'm not saying we should get rid of the GPU controls by any means, but I just think it shows that it's an area where you've got to have some nuance. You've got to strike the right balance. I also think, though, that it shows that this is an area where, although the U.S. probably still has the lead, it's a tenuous lead. And ultimately, I think that what's going to matter is what is the enduring advantage that we're going to have in AI. And I would submit that the enduring advantage really can't be having the best model, because it's just not clear to me that even if you I mean, we thought we could prevent others from having better models by constraining compute power. Maybe that's still the case around the edges. But ultimately, the enduring advantage that we're going to have would be network effects. I mean, that's the thing that is difficult to replicate. And it's not just the models, because the AI runs on the cloud. So ultimately, I think what you want U.S. cloud technology and U.S. semiconductor technology being the standard that people want to run their AI models they want to run their AI powered apps on. And I think that that's a place where the U.S. can have a durable advantage.
I think that's a very fair point. I mean, we could be really promoting kind of the build out of U.S. technology around the world and cloud and data centers, as well as the semiconductors, where I think we are seeing some of that. Let me ask you one more AI related question, which gets not to the policy or to the business, but really to the ethics of it. As we've talked about, I do think AI is going to be just an enormously transformative technology. There are also clearly real risks that'll come from it. And obviously companies that are developing AI have been building in safeguards, some of the simplistic ones that won't teach you how to make a chemical weapon or this kind of thing. But even if you sort of get beyond these kind of mechanical safeguards that companies are building, there are clearly ethical issues about, is AI going to be used to manipulate people? Is AI going to be used for a variety of nefarious purposes that are hard to build in kind of mechanical safeguards around? How do you think about the ethics of this?
Well, it's a good point. And as somebody who is, as I think my comments have probably demonstrated, a techno-optimist, I'm leery of things that would put a brake on innovation. At the same time, I am cognizant of the fact that sometimes as new technologies are developing, if you have an incident, and the paradigmatic example would be 3 Mile Island, where in the 1960s there was a lot of optimism around nuclear power. I mean, I've even seen a few like cartoons and things where people were talking about nuclear power. It was
I think people sort of thought you might have like a nuclear reactor down the street and energy. It was a very optimistic time. Yeah, your car was going to have a nuclear power plant in your car. This kind of thing. Yeah, totally.
Exactly. And one incident at 3 Mile Island completely reversed that. And so if you think that there is promise to this technology, as I do think you have to be concerned about those kinds of incidents. At the same time, though, you mentioned building a biological weapon. If you want to build a biological weapon, you don't just need a recipe for it that an AI model in theory could help you create. You need a lab, you need the ingredients. And so I think some of the harms that people are worried about are not harms that are necessarily created by AI. To the extent that those harms are there, you need other ingredients in order for the harm to manifest itself. And so I tend to worry more about a situation in which we would overreact rather than underreact. And I also think that if we were just in a world where we're concerned about what's happening in the United States, maybe we could take a more precautionary approach, and that would be the appropriate thing to do. It's just hard for me to see how we can really do that in a situation where this is about global economic competition and the relative position of the United States and other great powers around the world. It's both fortunate and unfortunate that this AI revolution is playing out in the aftermath of what we saw happen with social media, because I think that the trend is often to correct for the last mistake, and the conventional wisdom in Washington, I think, is that there should have been more regulation of social media in the early days, but falling victim to that inclination sometimes can be dangerous to innovation as well. So I'm not giving you a firm answer on this, Peter, because I think it's really complicated, and I think to some extent we just kind of have to muddle through. I, for one, have a fair amount of faith in our tort system. I mean, just kind of going back to the basic kind of law school way that we used to think about these things. The great thing about our tort system is it evolves. The standard of care will evolve. I think companies have a great deal of, and one of the things is you do have the companies who are really at the center of this are big companies that have a lot to gain, but also have a lot to lose. And I think that they have a certain amount of incentives to do the right thing. I think that there are constraints, and at some level, I think we're all just going to have to learn together as this thing evolves. But I would be really reluctant to take a completely European precautionary approach and minimize the potential for innovation.
Just two thoughts on that, and then I want to come to a couple of closing questions here. I remember reading an interview, I think it was with the head of Norway's Sovereign Wealth Fund, maybe late last year, and he made this comment about how in Europe they have lots of regulation and not much AI, and in the U.S. they have very little regulation and lots of AI. And I do think at the end of the day we want to get the AI, and then we can then kind of figure out how to regulate it so it doesn't do harmful things. But we actually have to have the technology first. And then similarly, it was very interesting to me, CJ, to hear you bring up the tort system, because I think sometimes policymakers undervalue that part of our legal system, or they even almost malign it because there's so much sort of news around the occasional fairly silly seeming tort outcome. But I actually think a legal system where judges and lawyers can address facts as they arise and set rules of liability in kind of an iterative process as the technology develops can be a quite sensible way for a society to handle some of these emerging technologies. But as we come to the end of our time, I have a couple of final questions I want to ask you, one of which is more personal. You're from Kansas. You spent many years in Washington, D.C., policymaker, as a lawyer. You're obviously here speaking in your personal capacity, but you started your current position at Microsoft while you were in D.C., and now for the last year or so, you've been out in Seattle. How do you, having been in D.C. for many years, but now obviously being actually based out in Seattle and working at a technology company, I'm curious what differences you see in kind of how D.C. thinks about some of these security and economics issues and how folks out on the West Coast think about some of these security and economics issues.
Let me just say that the thing that strikes me is just that as you get further from the Acela Corridor, the gravitational pull of those cities in that area just gets weaker. And it's weakest in the West Coast and probably the weakest point still as you get to the Pacific Northwest. Because it's like a lot of the rest of the country, even when I lived in Kansas, I think that orientation is still what's happening in New York, what's happening in D.C. is just very much at the front of people's minds. On the West Coast, it's just very different. It's really a focus on, in the technology sector, it's really a focus on the technology itself, on the competition, where are we getting the best talent. That's really what I think people wake up every morning thinking about. They don't get up and think about U.S.-China competition and a lot of these other issues. Now, that's maybe less true today than it would have been, say, 10 years ago. But I still think that there is that divide. I think policymakers in Washington would be well served by just spending more time on the West Coast. I mean, I know you and others in the Biden administration tried to do that. But I think it's really, really important as we move forward in this new era of great power competition. I personally think at the end of the day that technology is going to be the deciding factor. I think who wins in AI, who wins in robotics, who wins in quantum computing, I think those are really the most important questions that will determine the global pecking order 20, 30, 50 years from now. And the U.S. government cannot maintain America's position as the preeminent global power without the help of the tech sector. There has to be appropriate separation and checks and balances, but I think that Washington needs the West Coast tech sector and vice versa. There needs to be a lot of, I think, conversation and partnership between the two.
It is striking to me just to see sort of the difference in approach to solving problems. Not one of the issues, CJ, we've talked about today, but when I was in the White House, one of the big issues for the Biden administration was electric vehicles and charging. And the Biden administration spent a couple of years working with Congress trying to get money for charging infrastructure. And that money has been extremely slow in getting out the door. Meanwhile, I have a friend who lives out in Seattle, started a new company, serial entrepreneur kind of guy, started a new company, it's raised some money, that is basically kind of an Uber for charging. So if you have a home charging port in your driveway, you you can rent it out on the platform and let somebody come and charge their car
Oh,
on your driveway. And it's a totally different way of thinking about solving the problem. You kind of need that kind of thinking in terms of how do you solve the problem and not just be thinking about this from kind of a policymaking or Washington-centric realm. So very much appreciate your comment on the differences here. One final question for you, because I know we are pretty much at our time. You served, as we've discussed, in the first Trump administration. I think we've had a quite lively first almost 4 weeks of the second administration. And when I look at President Trump, I certainly see someone who I think would readily admit he wants to surprise us in many ways, and he wants to keep us on our toes. What do you think we are not thinking about that we're going to see out of the Trump administration over the course of this year? And how do you think Trump is going to surprise us over the course of this year?
Gee, if I knew the answer to that question, Peter, I think I could.
Hedge fund guy. Then you could be a hedge fund guy and make a lot of money.
I'd be doing something a lot more lucrative than practicing law. I think that at the end of the day, the president really wants the country to succeed. I really do believe that. And that the measures of those success, I think, will guide and to some extent temper some of his policies. So if the markets have, I think he has a higher tolerance for disruption than other presidents have had, but at the same time, I think he's going to care about what the markets have to say. I think he'll take that feedback, and I think he'll adjust if something isn't working out. And that's not a bad characteristic to have in a president. If you look at President Roosevelt during the New Deal, switch tactics and change things up. That's sometimes a little uncomfortable to watch, and the uncertainty can have some costs. But I guess at the end of the day, what I would expect is that you're going to see a lot of pragmatism in how the economic, trade, technology policies of this administration unfold. And it certainly will be interesting, but at the end of the day, I think that there will be an underlying current of pragmatism.
Well, that's a great note to end on. CJ Mahoney, just want to thank you for joining us today. Thank you.
Thank you so much, Peter.